we have a burst of energy in store for you, okay?
Oh, yeah.
Limor is just a firecracker on stage. She's going to talk about a lot of exciting things that I'm pretty pumped about. Real estate investor and money expert. She has a TV show. I'm going to read the bio, but she has a TV show about cryptocurrency. So when Tony and Sue asked me to come MC, when I saw that, I was kind of like, wow, this is interesting. Really, they've got a real diverse group of speakers. So this afternoon should be just as good as this morning.
Better.
Better? See, what did I tell you, right? First speaker after lunch. Now, she might give some attitude there, so I might have to tone it down. Limor Markman is a real estate investor and money expert. She is the host of the TV show The Fortunate Future, which airs nationally across Canada. On the show, Limor interviews experts on cryptocurrency, real estate investing, and personal finance. Following a decade in the banking industry, and by the way, she was a professional Latin dancer. Right? So was I, but I was alone in my room while I did that. Limor found herself asking if there is more to life than climbing the corporate ladder and working even more hours. With these thoughts in mind, she embarked on a journey to educate herself on real estate investing and has quickly become an accomplished real estate investor with properties across Canada. She has experience with multiple investing strategies, including rent-to-owns, hard money lending, wholesale, private mortgage, pre-foreclosure, as well as fix and flip. She has been traveling across Canada teaching real estate investing for 4 years so that average Canadians can achieve their greater than average dreams. Limor is the founder of Limor.money, and she'll talk about this in her TV show throughout her presentation. And the YouTube channel Limor, where she empowers people to live, this is a big word here, unapologetically, financially fabulous lives.
Got it.
She is also a contributing author to the best-selling book, Who's Going to Stop Us Now?, where she tells her personal finance journey. Limor is frequently sought out by the media and has been featured on BNN, Global, CTV, Huffington Post, impressive, National Post, and the Globe and Mail, to name a few. Come on up, Limor.
Thank you, AJ. That was quite the introduction. Thank you so much. All right, how's everybody doing? Yeah, awesome. So I know you're still nibbling, but I really want to make sure we amp up the energy here this afternoon. How exceptional to be at the first real estate investor conference here in Ottawa, right? Awesome. Sue and Tony, great job today. All right, so I'm charged this afternoon to chat with each of you about my favorite subject, money. Anybody here, by show of hands, love money? I mean, like, really love money. Yeah, that's awesome. Really, really exciting. Now, you guys all in here have this love for money, but not necessarily out in society. In fact, most people, when they think about money, they think about overwhelm. They think about frustration. They think about stress. They think about finances with a bit of a negative connotation. But to win at the game of money, my friends, we got to play the game. We got to have a little bit more play in our lives. So let's think about this with a bit more fun. Okay, let's think a bit about play. I like to think about money as something really exciting. So I want to ask you all, I know you're eating, but don't mess all over yourself, but if you got your hands free, close your eyes for a moment. Go ahead, close your eyes for a moment. And I want you to think back what it was like when maybe you were 6 or 8 or 10, and it's a Saturday afternoon and all your chores are done and your homework is done, and your parents said to you, little one, go play. And you were chasing your friends down the street, or maybe you were playing ball hockey, or maybe it was with your trains or your siblings. You had a big game of Monopoly out there going. Or maybe you were like me with all your sisters and you had all the different dolls. But think about when you used your imagination and you didn't have a care in the world. Shake up your shoulders a little bit. Feel what that felt like. Yeah. Take a deep breath in. Exhale. And I encourage you now to open your eyes. And what I could see from up here is that when you did that, you actually smiled. You actually enjoyed the process. And when we think about money and winning at the game, if we play, it really changes the way we think about things. Now, as adults, we don't play all too often, but one of the ways that we play is vicariously through all of our sports teams. Now, you guys got the Ottawa Senators here. Any Senator fans? Woo. Yeah, awesome. But what we do when we get together with our friends and we go to the sporting event, what do? We put paint on our face, we eat candy apples, and we eat popcorn and peanuts, and we cheer, and we're silly, and we don't worry about anything in our lives. And so today, what I want to do is combine that adult play with the game of money. I want to combine it with the game of money because in the game of money, there's really 4 components that I want to address for each of you here today that's going to help you to get ahead financially. Now, the first one, of course, is our offense. Offense is all about getting more numbers up on the scoreboard. And what does that mean for us as investors? Making more money. So what we want to do is increase the amount of dollars that are coming into our account on a regular basis. The second thing we want to do is work on our defense. We want to make sure that all those hard-earned dollars that are coming in are in fact being protected and not being spent. Then I want to talk to you very importantly about our head coach. We had Marianne this morning talk to us a little bit about our head coach, but it's such an important point. I'm going to talk a little bit about it this afternoon as well. And then last, but most definitely not least, is having a plan so we can win at the Champions. So we can win the ultimate goal of financial freedom. Now, I want to ask, how many of you in here already, in some way, shape, or form, invest in real estate? By a show of hands. Okay, awesome. That's a lot of people here in the room. Fantastic. And you guys are here. It's a Saturday. And I know it's a cold Saturday. But there are so many other places you guys could be on a Saturday, but you chose to be here, learning and investing in yourselves. Not like some of the other investors out there, right? And the investors in here all know that when we invest in real estate, we want to make sure that we have a positive cash flow coming in every month. None of this, oh, it's okay, I'm a real estate investor, but I have to put $200 towards the property every single month. That's for investors out there. None of this, oh, I'm hoping the value is going to go up. Now, you've had a lot of speakers here already this morning, and we've got a jam-packed day this afternoon, and I tell you, none of the speakers up here are going to talk to you about a strategy called hope and pray, right? We're going to focus on doing this in a strategic way. Now, I want to share with you a little story about a puppy named Henley. So his owner, Andrew, one sunny Sunday afternoon, decided to sit out on the porch and read a book. And his puppy Henley came over and sat down right beside him. Now, as he's reading and he's leafing through the pages, his puppy starts whining. He looks down, he says, okay, well, maybe he's thirsty. So Andrew goes inside, he gets a bowl of water, and he puts it down. The puppy has a little lick, and he puts the bowl down, and he gets back to his book, and the puppy is still whining. So he looks down and he says, well, what could be wrong? It's a little bit windy outside. So he goes inside, he gets a blanket, and he puts it on top of the puppy and says, okay, maybe that's what's the problem. Maybe it's like the crazy winds that you guys have here in Ottawa. Oh my gosh. And he gets back to his book, and the puppy is still whining. So he goes and he takes the blanket off, and he picks up the puppy, only to realize that the puppy was lying on a nail. But the nail was only hurting the puppy a little bit, so that the puppy was whining and moaning. And I share this story, my financially fabulous friends here, because each and every one of us here in this room has a little thorn in our side, has a little financial thorn. And for some of you, it may be that if you don't sell that property that you're hoping to sell, you're not going to generate a profit. Or if your furnace breaks down and you've got additional maintenance fees, you're not going to be able to handle it. Or for those of you here who maybe have a JOB, and that's okay, that if you lose that JOB, in 3 months' time, you won't have enough money. So we all have that little thorn in our side, but we usually try to ignore it. Rather than being willing to get up, take significant action to make sure that our financial future is in place. So do I have your commitment here today? We're going to get up off of that thorn, ladies and gentlemen, by a show of hands. Awesome. That's fantastic. So let's jump into the game of real estate. Let's jump into the game here. First up, we have got our offense. We got to have money coming in the door. We want to increase that scoreboard as much as possible. We need to have a really, really good strategy. First up, you guys probably know by now that in 2019, it's no longer acceptable to have one stream of income. My friends, in 2019, we need to generate multiple streams of income. We need to be able to have flexibility in our lives. We need to be able to have more money because, gosh darn it, it costs a lot of money to live the life we really want to live, especially if we're moving towards our dream life. So we need to consistently be working towards multiple streams of income, and that's what we need to be teaching our kids and the next generation. No longer is it good enough to teach somebody growing up to go out and get a job and work for 30, 40, 50 years and then retire. We need to have multiple streams of income. Now, let me ask, how many of you here still have a job? Anybody here got a job? Awesome, awesome. Now, how many of you love your job? That's great too, okay. Now, whether you love your job or you don't love your job, here's what I'm going to urge you to do. Ask for a raise. Now, don't do what the rest of society does, which is wait until December and sit quietly and hope that there's a year-end bonus allocation for you. No. I worked in the corporate world for 12 years in the banking industry, and during that time, every June, I would say to my boss, can we have a meeting? Let's talk about how much I contributed to the bottom line of the company. Let's talk about how many expenses I cut. And let's talk about how much money you're going to give me as a raise. And now the reason, you guys, the reason I say in June is because in June, nobody else is doing this. So if you ask in December when every single other employee is asking for a raise, there's not as much money to go around. But if you ask in off-season, you stand a better chance. And I'm seeing some nods over there from my HR friends. It's awesome to have that approval. And so with earned income, we also want to make sure that we're starting businesses as part of our multiple streams of income. And I love starting businesses, so anybody who wants to chat about later on today, I'm all ears. But how about those of you who are self-employed? Anybody here by show of hands self-employed? Psychos. Now, if we're self-employed here, and of course I'm self-employed as well, if you're self-employed and you have not gotten a raise in the last 2 or 3 years, guess what, my friends? That's on you. It's time that you raise the value that you're giving to your clients. It's time that you raise the expectations of what they can get from you, and it's certainly time for you to increase how much money you're making and the offense. Of course, while we're all here today, one of the best and fastest ways to be able to increase our offense, those dollars coming in the door, is of course through the wonderful game of real estate. Now in real estate, as well as traditional jobs of sorts, we have the opportunity to make different kinds of income. Now the first one is called earned income, and you guys probably know that means trading your time for money. And that can look a number of different ways. So, you could work at the movie theaters selling tickets for maybe $15 an hour. I don't know if minimum wage has quite made it there, but that's one way. Or you could be a realtor, or you could be a mortgage broker, or you could be working on an hourly rate, you could be on a salary. But in all of those instances, we're trading our time for money. Now in real estate, there's a number of different strategies where we can in fact still trade our time for money, but we trade our time for a much better amount of money. Now, how many of you have ever seen those fix and flip TV shows? Anyone seen those? Yeah, I was addicted at a time, I'll be honest with you. But the cool thing is, if you actually fast forward the middle, you can watch a 30 minutes in about 10. But when you watch those shows and you learn about that strategy, it looks amazing. You go out and you find this rundown property, and then you crunch a couple of numbers and you have some contractors and there's a massive disaster and then it gets resolved and then some decorates the house and then cha-ching, there's a whole lot of property and a whole lot of profit to be made. Now, for those of you who have attempted that strategy, you know it's probably not that straightforward. So we have those TV shows, so I'm not going to focus on that strategy today, but I do want to share 2 strategies that will enable us to increase our offense from real estate. Now, of course, there's many more, but I only have a limited amount of time. So the first one that I want to talk to you about is actually a little story about a client of mine. My client's name is Jake. Now, Jake lives out in Barrie, and he is a social butterfly. Like, those people who come to a networking event and they collect everybody's cards and they follow up with them all afterwards? Yeah, that's Jake's personality. He is such an extrovert, and Jake reached out to me and said, Limor, I need your help. My wife's a little bit unwell from a health perspective. She's unable to work. He's got 4 kids, and he really needed to generate some income to be able to help support his family. So Jake and I brainstormed. We talked about a number of different strategies, and the one that we decided was the right fit for him is actually called wholesale. Now, wholesale, as a real estate strategy, is connecting people who are looking to buy properties together with properties that you find. So the first thing that I had Jake do is go out and talk to as many real estate investors as he could possibly find. And he created a big database, was able to identify, of course, who they were, what area they wanted to invest in, what kind of returns they were looking for, and of course, how quickly could they actually close on the property. So Jake had this big list, and once he identified some commonalities of the types of properties not only investors were looking for, but contractors were looking for, because they're often looking to do the renovation themselves, Jake went out and he started putting in offer after offer after offer after offer after offer, all slightly below fair market value. And we got an offer accepted. Of course, he had all the right clauses in there, including the assignment clause. Jake found a property that matched perfectly with one of the criteria of one of the contractors. So he was able to assign the property to the contractor. The contractor was able to purchase the property, and when they purchased it, Jake made a $5,000 wholesale fee, or a finder's fee. So he was able to leverage his bubbly, excited personality to be able to generate some income. And that's a strategy that allows us to leverage earned income to increase our offense. The other type of income that we talk about so frequently, especially when it comes to real estate, is that beautiful, passive income. The one that lets us lie on the beach, right, and not do a whole lot. How many of you here are aspiring to some passive income? Yeah, a little ching-ching, right? We're all looking forward for that one. And so passive income, here's the myth I want to bust for all of you guys, is that it does require you to actually do a little bit of work up front, right? It's like if you write a book, you actually have to write the book before you sell it again and again and again and again. And so I want to share a little story with you about one of my clients. This couple came to me. Their names are Ann and Kevin. Now, Ann and Kevin live out in the Kingston area. And Ann and Kevin have a unique situation in their life that's actually not that uncommon these days. Now, Ann and Kevin were newly married, but they both had had previous marriages, which meant they both had kids from a previous marriage, and they also had a lot of financial baggage that came as a result of that situation. You guys know what I'm talking about. And so when they got together, they said, okay, we're going to right the wrong. We want to have a path forward. Limor, we're really excited. We want to invest in real estate. However, we don't have that 20% down payment that's required in order to be able to buy a rental property. So we sat down and we talked about what would be the best strategy for them, and what we came up with is buying a rental property where they could rent out in their area, but put in an offer that included seller financing or a vendor take-back. Now, if you haven't heard of seller financing or a vendor take-back, let me explain what that is. Seller financing is when the seller, the person who is selling the rental property, will hold the mortgage. And typically this happens when the sellers own the property for a significant period of time. And, they bought it once upon a time ago when it was $100,000. And I'm exaggerating, but we all know how the price of real estate goes up. And they don't have much of a mortgage left, or they don't have a mortgage at all. But the seller is willing to hold the mortgage for the buyer. Now, I see some confused faces here. Why in the world would a seller hold a mortgage for a buyer? Well, let me tell you why. The first reason that a seller would consider holding the mortgage for the buyer is because if they sold the property and made all the money in one day, they'd have to pay tax on all of that capital gains. Whereas if they defer it over a period of time, it's going to create a significant tax advantage for them, right? Ask your accountants, they'll tell you. Secondly, if the borrower decides for whatever reason that they can't pay them back, in the same way that if you don't pay your mortgage, what's the bank going to do? Take your property. The seller can come back and take the property. And they know the history of the property. They know that it's been taken care of. So that's the second reason. Now, the third reason is that all of this time that the seller has owned this property, every month the tenants paid the rent, they used that money to pay the expenses, and whatever money was left over became their passive income that they kept every single month. So they're used to an influx of money on an ongoing basis, and they probably fit that into their spending. Now, if the seller gives a mortgage to the buyer every month, the buyer is going to collect the rent. And they're going to pay that mortgage, and that mortgage money is going to go right to the seller. So the seller continues to have that benefit of monthly passive income coming through. Okay, so maybe you're sold. You're like, okay, great, this is awesome for the seller, but what about the buyer? Why is this advantageous for the buyer? Because the buyer doesn't have to qualify for a mortgage with a traditional financial institution, which means that if they're self-employed or if they don't have a good credit score, that's okay, because the seller is going to be using the property as collateral, and they know all about the property. So Ann and Kevin were really excited about this strategy. They're like, this is great. We're going to use a little bit of our money, but we don't have to have that full 20% down payment. So what did they do? They put in offer after offer after offer after offer until they found a fourplex in the Kingston area where they lived. And they asked the vendor, the seller, to hold 100% of the mortgage, just because it's better to ask. The seller came back and they said, oh, I'm sorry, we can't do 100% of the mortgage, but we can do 95% of the mortgage. So Ann and Kevin put in a 5% down payment, and they own this property, and to this day, every single month, they make $500 in positive cash flow. Now, Ann and Kevin are very happy. And I share this with you because if you don't have a strong offense, if you don't have a lot of money coming in the door every single month, you're not going to be able to win at the game of money. You're not going to be able to achieve financial freedom. So to win at the game of money, and you may want to write this down, number one, you must build your offense. You must build your offense. Okay, great. So now we've got all this money coming in the door, and we're thinking, woohoo! I'm great. I'm golden. Life is good. Anyone ever felt that way? Lots of money coming in the door. I'm good. I'm done. The next thing we need to consider, of course, is our defense. We've got to protect our hard-earned dollars. We've really got to be on top of them. And this is particularly important as we start to generate more money and we start to have a little bit of this thing I like to call lifestyle creep, right? So it's like, okay, I'm making all this money. Now I deserve a nice house. And I also deserve a nice car. And then I also need a nice vacation to get away from my nice house and my nice car. And of course, if I'm going on vacation, I got to look great, right? I'm sure some of you can identify with this. And so we need to protect our hard-earned money. We need to, even when we're making a lot of money in real estate, be really conscious of what's happening in our finances and in our spending in our personal life. I'll tell you guys this story, and it just completely blows my mind, and kind of so serendipitous that it happened. This happened a week ago, actually. A new client that I started working with in the Toronto area. We sat down, and he said to me, Limor, I need a game plan. Like, I need some help with my finances. I'm like, okay, great, let's talk about this. So we sit down, and he says, not last year, but the 3 years prior to that. The 3 years prior to that, I made $3.8 million. And I was like, awesome, that's great. You're going to be, I can't make this stuff up. And I'm like, this is great, we've got an awesome foundation, we're going to go through this portfolio. And he goes, I'm like, oh. He says, yeah, but I only have $200,000 left. And I was like, oh, but you mean like outside of your property, right? And properties in Toronto are really expensive. Actually, funny, last night, Tony and I were driving around. He picked me up, and I'll tell you about that in just a moment. But we're driving around, we drove by a couple of houses, and I'm like, oh, how much is that? How much is that? Just kind of curious. And he goes, oh, high fours. And I was like, oh, $4 million? Coming from Toronto, that's what my mindset is. And so I assumed when he had $200,000 left, the rest was in his primary residence. And he put his tail between his legs and looked down at the ground, and he's like, no, I'm still renting. And I was like, trying not to be shocked and judging at the same time, but I was like, what happened to the other $3.6 million? And he was like, I honestly don't know. So we discovered there were some Porsches and really fancy things that happened in the process, but I kid you not, this happens. As we start to make more money, our lifestyle starts to creep up. And I'm not saying you haven't earned it, but I want to share with you that it's really, really important to make sure that we are keeping track of our spending. Now, all of us also have spending triggers, right? Everybody has something that's going to trigger them. So maybe it's your mother-in-law. Every time you go see her afterwards, you got to de-stress, and maybe you're going out buying some technology, right? Maybe it's your boss. Every time you and them, you're butting heads, you go out on your lunch break and you're like, ooh, I got to blow some steam with a new purse, right? Maybe it's every time you go on a bad date. I don't know. You figure it out what it is for you, but it's important for you to identify what that looks like so that we're not spending too much of our money. Now, additionally, I have to share with you guys that debt is a big challenge. And I want to delineate here, especially in a room of investors, that we have consumer debt, and we also have the kind of debt that Robert Kiyosaki talks about, that leverage debt, those mortgages to be able to build your wealth. I'm not talking about this. I'm talking about the consumer debt, because here's what the stats say, that 80% of people in North America are in debt. Now, I know that doesn't apply to anybody here in this room, right? But 80% of people are in debt, and debt is the single biggest killer of our financial future. So I urge you, if there's some financial debt, you're going to want to make sure you get that under wraps. We also need to think about who have we given permission to help themselves to our dollars. We have this really awesome system, which is called automatic bill payment, which is like a set it and forget it. You don't want to have to worry about paying your bill, so you just let the bill providers access your bank accounts or access your credit cards. And so you may be thinking, great, now I'm never going to be late. However, that trip you took down to the United States when you had to use your phone all that time and you went over your data, but your provider didn't let you know, and then you come back and you didn't check your bill, but it was actually an extra $500? What I want to share with you is that it's an awesome system, but my financially fabulous friends, we have to check in on that 2 or 3 times a year at least. In fact, my sister, she's the queen at this. She calls up her cell phone company and she asks for a promotion, and she's like, what day does this promotion expire? 3 days prior to the expiration, she's marked it in her calendar and she's calling in to negotiate again, right? So we want to make sure that we don't allow other people to tap into our hard-earned money. Now, I'd be remiss at a real estate investing conference not to talk about taxes. Now, of course, I'm not an accountant and I don't play one of those on TV, but I'll encourage you to talk to an accountant, specifically one who focuses on real estate, because we have so many creative and legal opportunities to use corporations and different types of strategies to ensure that we are minimizing the amount of money that we need to pay. I'm sure you guys have heard that it's not necessarily how much money you make, but how much money you keep. Exactly. I want to share a little story with you about a client of mine. Her name is Veronica. Now, Veronica lives out in Langley, BC. And Veronica, when she reached out to me, shared with me that even though she's a very high income earner, she makes $250,000. She's a single mom of 2 girls. And as a single mom, she's really concerned about ensuring the financial future for her family. And so we said, okay, let's sit down, let's take a look at what's happening and what kind of strategy may make sense for you. And so when we sat down and we looked at her finances, we said, okay, great, your offense is awesome, making $250,000 a year. However, her defense, wasn't so great. In fact, she had a little bit of consumer debt, and only a little bit of money in her savings. But what I challenged her to do is to take a look at her credit card statements for the entire year prior. And when she did that, she came back to me, and literally she was in tears and she was shaking. She was like, Limor, I spent $70,000 last year on my credit card. And I would encourage all of you to take that challenge yourself, because you'll probably be surprised if you see what those numbers add up to, right? You know, a fancy dinner, an extravagant experience, a nice gift for the person that you love. Things tend to add up really quickly. So we put Veronica on a spending diet and moved her over to cash only. And in the following year, not only was she able to pay off her debt, but she was able to save, contributing to her existing savings, over $50,000. And then we talked about that $50,000, and she decided on private lending as the right strategy for her. Because as a single mom, she didn't have a lot of time in her life to manage a property. She didn't want to handle tenants or vacancies, and she really wasn't into that whole maintenance thing. And so private lending is an opportunity for you to be the lender, for you to take the money that's perhaps in your RRSPs, the money that's in your tax-free savings account, and use the money that's in those accounts to lend it to another individual. So it means that you do not have to qualify for a mortgage. It means that you are not the landlord. It means you're not dealing with a vacancy and you're not dealing with any maintenance, but you are in fact secured by real estate, because your loan is registered on title. The same way that when you have a mortgage lender for your property, when you bought your first home, they are registered on title. And the same way that if you stop paying your bank, they can step in and take over the property, the same thing can happen with Veronica when she puts her money in. So we have to make sure that we've got enough equity behind us. We have to ensure that we understand the differences between the provinces and the foreclosure policies, because in Ontario, we have power of sale. In Alberta and in BC, we've got the judicial system, and so things can take a little longer. So we have to be informed on the value of the property, who is in fact the borrower, what are the foreclosure proceedings. But I'll share with you that this is one of the most popular strategies that I teach, because we all have an opportunity to have our money growing at a much higher rate without necessarily having the volatility of the stock market, and it's backed, of course, by an asset. So Veronica was all excited about this, and she ended up putting her $50,000. It was a single family home. There was plenty of equity behind her, and she was generating 12% return on her money. Now, here's the interesting thing that Veronica said to me afterwards. She said, Limor, you know, all that time that I was paying debt on my credit card, that interest was a penalty. But all the time now that I'm generating positive interest on my investment, that, in fact, is a reward. So we have to understand that interest can be significantly in our favor, or it can play a role against us. And so, guys, I want to share with you that if you, in fact, don't have enough defense supporting you, covering your finances, you're going to find yourself in a situation where you're not going to be able to win, where you're not going to be able to achieve that financial freedom that we're all striving for. And so, to win at the game of money, my financially fabulous friends here, number one, we have to have strong offense. Number two, we have to protect our money with strong defense. Okay, great. So we got all this money, it's coming in the door, and then now we're protecting all of our hard-earned dollars. And so the next important thing we need to think about is, what is our head coach telling us, right? What are those messages you're hearing day in, day out, every week, every month, every hour? Because if your head coach is saying to you, you suck, you can't do this, you're not smart, you can't figure this out. If your head coach is saying that to you, your head coach needs an upgrade, right? We got to chat with Marianne from this morning. Because your head coach should be saying to you, you're smart, you're capable, you got this, you can figure this out. That's what your head coach needs to be saying to you. And all of our head coaches waver on occasion, so here's what we need to do. We need to read every day. We need to make sure that we are listening to positive messages every day. Audios, podcasts, positive affirmations every single day. Now, someone's going to come up to me after this speech and say, well, Limor, what about on the weekend? Every day. And what about on vacation? Every day. Every single day, we need to reaffirm the positive messages. You know, and of course, we need to know what's going on in the world, but don't let yourself listen to hours and hours of the news, because that does the opposite, okay? You also want to make sure that you've got a mentor. You've got a coach. Someone who can support you, can help you with your mind and your strategies to be able to take leaps and bounds. And to support you on that, I actually want to give you a little gift. So if you could all grab your phones, go ahead, and this is allowed, grab your cell phones and open up a brand new text message. If you text the word fabulous to 77982, I will give you a copy of my ebook called The Game-Changing Financially Fabulous Strategies That No One Ever Told You, to help you on your reading journey. Now, I want to tell you a little story. It's kind of embarrassing, but you know, it's very applicable. So I came in from Toronto, and yesterday I decided to take the train. And when I booked my ticket on the train, it said Toronto Union Station to Ottawa. I'm like, okay, great. So here I am on the train, and all of a sudden the conductor come on. He says, 10 minutes till Ottawa. I'm like, okay, great. So I start gathering all my bags, and I'm ready to go, and I'm standing at the door, and I get off, and whoo, it is blustery cold here, and snow, and I'm come on into the station, and what do? I call my dear friend Tony. I said, Tony, it's Limor here. I'm at the station. I'm a few minutes early. Train must have been quick. Tony says, no problem. I'll be there in 15-20. I say, great. So I'm huddling up in this really cold station, and Tony calls me and says, Limor, I'm here. I say, great. I come outside, and it's blowing, and my hair is going everywhere. And I'm like, Tony, I don't see you. Where are you? He's like, oh, by the bus shelter. I'm like, okay. So I got my bags, and I'm a bit of a health nut, so I've got like all my juices and my special pillows and stuff, and I'm going all the way over, and I'm like, Tony, I still don't see you. And he says, oh, I'm doing another loop around. I got my four-ways on. I'm like, Okay, I'm like, I'm going back to the door of the train station. So I go on back, and I'm standing there, and I'm like, Tony, I'm right by the cabs. And he's like, there's 4 different places for cabs. Where are you? And I'm like, it's so cold I can't even see. And then I turn around and I say, oh, Tony, I'm right under a sign that says Fellowfield Station. And he goes to me, love, you're at the wrong station. I'm like, okay, but Tony to the rescue, he says, stay right there, I'll come and get you. So I walk inside, and my head coach goes ballistic. You're such a goofball. You're such a dork. You're wasting Tony's time. It's the day before the conference. He has so much to do. And luckily, I caught my head coach. And I thought, okay, time to bust open a book. Because this happens to all of us. And in order to be able to win, we need to have that positive head coach. We need to, number 1, build our offense. Number 2, protect our money with defense. Number 3, have a positive head coach. And once we have all of those in play, it's really important that we work towards building our financial future. We need to ensure that we have a plan, in fact, in place. And so I want to share a story with you about one of my clients. They're a couple. Their names are Kathy and Dave. Now, Kathy and Dave live out in Edmonton, and oh my gosh, Kathy makes the best apple pie you could ever imagine. I'm a bit of a health nut, but when you go to Kathy's place, you've got to try her apple pie. Now, they've got 2 kids, and they've got a property that they live in, and she's a manager at a high-end hotel, and her husband, of course, Dave, he's an executive, and so he travels all over the place. So they really wanted to be able to take the money that they have and amplify it and grow it to another level. So after discussion, we determined that the best strategy for them is a rent-to-own. Now, if you're not familiar with a rent-to-own, it's an opportunity to help a family whose credit is quite bruised. And they can't qualify for a property on their own, but they really, really, really want to get into a home. And so they provide an upfront deposit, which is called an option consideration, and then they would move into a property that they would select that the investor would buy, and over typically a 3-year duration, they would work on repairing their credit, and then they would buy the property from the investor. So Kathy and Dave decided this is fantastic, but they wanted to work with a rent-to-own company. They didn't want to find the tenant. They didn't want to manage the whole situation. They wanted it to be hands-off. And so they got together with a rent-to-own company. They found a tenant buyer. Kathy and her husband put in the offer, provided the remainder of the down payment, and then went about their life on their merry way. Now, during this time, the tenant buyers, the individuals who were aspiring to home ownership, are saving for their down payment. They're working diligently to repair their credit, and at the end of 3 years, they're ready to buy the property. But all this time, the rent-to-own company provided updates, provided reports, checked on the tenant buyers. And Kathy and Dave got to sit back and earn 21% every year for those 3 years. And so now they're on a journey to look for the next opportunity. But this was critical because it allowed them to be able to build their financial future. It allowed them to be able to build their plan. So my financially fabulous friends here, if you don't have a financial plan, I urge you, please, sit down, work with a coach, work with a mentor, work with another investor, and figure out what are your goals? What do you want from life? What is most important to you so that you can actually get there instead of waking up and saying, gosh, where am I? And so to win at the game of money, there's 4 important things that you need to do. And if you haven't written this down, you may want to write it down. Number 1, you want to build your offense. You want to have lots of money coming in that front door. Number 2, we want to make sure that you protect your money with solid defense. Number 3, you want to have a positive head coach who's sharing positive messages for you in your mind on a daily basis. And of course, you want to have an absolutely solid financial freedom plan. Now, I know in this short duration of time, I threw a lot of strategies at you, and there's many more out there, and trust me, I could have spent 4 hours on any one of those strategies. In fact, that's what I've been doing for the last 4 years, traveling across Canada, teaching people how to invest in real estate properly, protecting themselves, ensuring that they don't make any terrible mistakes. But I don't want you to feel overwhelmed. I want you to feel excited, because there's so much opportunity in real estate, especially here in your own market. So if you take away only one thing from my speech here today, is that we all have that little thorn in our side. Whether it's your kid's education, your financial future, what may happen if you don't sell that property, what will happen if the market turns or your tenants move out. But if you've got that little thorn in your side, which we all do, I encourage you to take some action, to get up, increase your offense, improve your defense, improve your head coach, build a solid plan. You guys, you've got this. I'll be around for the rest of the day. I'd love to say hello to all of you. Thank you so much for having me here.